So, what if I told you that a single event, happening thousands of miles away, could pump trillions of rupees into the Indian stock market in just one day? Well, that's not a what if. It's exactly what just happened. In this explainer, we're going to break down how a sudden, massive drop in oil prices created a huge windfall and figure out who the biggest winners in India really are. Let's dive right in.
First, just look at this number, 15 trillion rupees. That is how much wealth Indian investors gained on a single day, April 8, 2026. I mean, that's an absolutely historic surge for the market. But what on earth could trigger something that big? And that brings us to the million-dollar, or I guess the 15 trillion rupee question. How did a temporary ceasefire and a conflict happening on the other side of the planet have anything to do with your investments here in India? Well, the connection is surprisingly direct, and we're about to lay it all out for you.
Okay, so this whole story doesn't start on Dalal Street. It starts with a major diplomatic breakthrough. On April 8th, the United States announced a 2-week ceasefire with Iran, and you could almost hear the nervous global markets breathe a collective sigh of relief.
Now, this is the heart of the matter, the Strait of Hormuz. You have to think of this as a global energy superhighway. A full 1/5 of the entire world's oil and gas supply has to pass through this tiny channel. So for a country like India, which imports a ton of its oil, any disruption here is a massive, massive problem. The reopening was a huge deal.
And this timeline just shows you how fast everything moved. The conflict kicks off in late February, immediately messing with shipping. By early April, oil prices are just skyrocketing, almost hitting $110 a barrel. And then, bam, on April 8th, a complete 180. The ceasefire is announced and the strait reopens. It was a perfect storm of tension, followed by just massive relief.
And of course, the most immediate result of all this news, a huge drop in the price of crude oil. The fear of a major supply crisis basically vanished overnight, and that sent prices tumbling down.
And you can see right here just how big that drop was. Brent crude went from nearly $110 a barrel all the way down to below 95. This sudden price crash is the rocket fuel that lit up that 15 trillion rupee market rally. So, the key takeaway is simple. For the Indian economy, cheaper oil is almost always incredibly good news.
So this brings us right to the core of our question today. Who are the big winners when oil prices fall off a cliff like this? Let's take a closer look at the sectors that really started celebrating.
First up, the most obvious winners are the airlines. You know, their single biggest cost, by far, is jet fuel. So when the price of crude oil falls, their operating costs go down right along with it. It's a direct shot in the arm for their profits.
And the market saw this coming a mile away. Just take a look at InterGlobe Aviation. That's the company behind IndiGo. Their stock leaped almost 9% on the day the news broke. Investors were clearly betting big on higher profits thanks to those lower fuel costs.
All right, next up we have a group that might not immediately come to mind. Paint and tire makers. You probably don't think oil when you think about these guys, but believe me, their businesses are directly tied to the price of crude.
So here's why. It turns out that crude oil derivatives, basically stuff made from crude oil, are a key raw material for both. For paints, they're used to make things like solvents. For tires, they're essential for producing synthetic rubber. So, just like the airlines, when crude prices drop, their manufacturing costs go down, which leads to better profit margins. And sure enough, big players like Asian Paints, MRF, and Apollo Tyres all got a nice boost.
Now for the auto sector, this was like a double dose of good news. First, some of their raw materials, things like plastics and paints, get cheaper. But maybe more importantly, cheaper oil means cheaper fuel at the pump for you and me, and that can actually boost demand for new cars and trucks. It's a real win-win.
And the market's reaction? It was immediate and it was strong. Tata Motors shot up 11%, and Ashok Leyland jumped over 12%. These are huge one-day gains, and it just shows you how optimistic investors suddenly felt about the auto industry's future.
You know, the good vibes really spread far and wide. The oil marketing companies, the ones who buy and refine the crude, like HPCL and BPCL, their costs just went down. The entire chemicals and logistics industries got a boost from cheaper fuel. Construction projects got a little less expensive because materials like bitumen are cheaper. And hey, even the banks got a lift from all the positive economic sentiment floating around.
But, and this is a big but, it's really important to remember that a drop in oil prices is not good news for everyone.
While a lot of sectors were popping the champagne, one part of the industry was facing some pretty serious headwinds.
Okay, so this lays it out perfectly. There are two sides to the oil industry coin. You have downstream companies, think of the refiners. Their whole job is to buy crude oil. So for them, lower prices are fantastic. It's a huge advantage. But then you have the upstream companies like ONGC and Oil India. These are the guys who actually find and sell the crude. So for them, lower prices are a disaster. It just means less money coming in for every single barrel they produce.
And after all this incredible positive news, it's probably time for a little bit of a reality check. Because this entire market rally, it's all built on something that's, well, very temporary.
This quote from an analyst report really says it all. The temporary nature of the truce. This isn't some long-term peace deal, it's just a 2-week pause button. This whole rally is essentially living on borrowed time.
So let that sink in for a second. This whole thing, the 15 trillion rupee rally, was all thanks to a fragile 2-week truce. It's a pretty powerful reminder of just how exposed India's economy is to what's happening on the global stage. So the really big question now is, what happens when that 2-week clock runs out?
And that's our breakdown for today. If you found this explainer helpful, do us a favor and hit that like button, and be sure to subscribe for more deep dives into the stories that are shaping our economy.
We really want to hear what you think. What's going to happen when this truce ends? Will the markets keep climbing, or are we in for another big shock? Let us know your predictions in the comments below. Thanks for watching.